Now we're above 20, thank God. What do you think will happen now? Are we going higher or lower? What's your perspective?
But is now the time to look at the mining stocks and silver again, or is this still too early?
Hi, everyone. Welcome back to Wall Street Silver. Our guest today is our good friend, the legend, David Morgan from the Morgan Report. Great to see you again, David.
Well, Ivan and Jim, thanks for having me back. It's always fun to be with you.
Yeah, it's a pleasure. Last video we had with you was a huge video, and you were talking about silver being below 20, and you were calling out the bottom. Now we're above 20, thank God. What do you think will happen now? Are we going higher or lower? What's your perspective?
Well, I think we're going higher. Could we hit one more spike low? Yes. Will we? I doubt it. I don't know. No one knows. But I did say months ago, one of the members of the premium service asked me, and we were like 22-ish, how bad could it get? And of course, I chart in front of the people and, speak. And I said, look, 1850 would be my exact number as far as, that. I shouldn't say exact number. It'd be an 18 handle, which means it could be 1812, 1887, or 1792. I'd still consider that to be called correctly. So I said 18 was the bottom, but in my technical work said it looks like about 18 and a half should be. So far, so good. But I have to remind everyone there was I think it was 1817, and I'd have to look back at a chart to figure out what year it was. But I called that low. It was a typical silver low, spike low, waterfall decline of about 3 days, kissed the 1817 mark. I said, that's it. And it was right for 14 months. And then it went below that. So not saying that'll happen this time. In fact, I'm emphatic it won't. There's just too much money printing, too many issues revolving food and energy and, the war and everything else to take this market much higher. But let's want to pause for a second. I know this is probably not protocol, but I received that from Jean-Claude.
Oh, very nice.
It's 10 ounces. So at $20 melt, that's a $200 gift. So thank you, Jean-Claude. I really appreciate your kindness there. And I have
where's our gift, John? What the heck?
So it's more than a paperweight to me.
Yeah, no, that's a great one. The lows off of, we were down in the lower 18 area. I think 1814, I'm looking at my chart, was sort of the lowest point it got about 2 weeks ago. And you called it, because I remember our video about a month ago when we were, getting there. You were like, hey, yeah, we could, it was like right just below 20 in the high 19s on our last video. And you're like, hey, we could get down to 18, but and then sure enough, it got down to 18 and then bounced hard from there. But it seems like what spiked this sort of, let's call it this recovery back, we're well above 20 now as we're talking here, was the Fed, after they raised interest rates by 75 basis points last week. In the conference call, or his press conference afterwards, Powell sort of hinted we might be slowing down in the interest rate increases going forward. So I guess they haven't said they're pausing. They haven't pivoted. He's basically hinting, though, there's only so much more they can do with interest rates here. I mean, there's a limit, right, to how high they can raise rates without everything blowing up just because of so much debt in the system.
Right.
Yeah, I mean, we've been through this many times, not necessarily on your channel, but look, if they really wanted to keep the dollar alive for another 10 years, the only way to do that is monetary destruction, which means a lot of the funny money's got to go to money heaven and die. And the only way you can do that is to take interest rates above the inflation rate. So you got to get it to at least 10%. If you pushed interest rates to 10%, not only would you not be able to pay the interest on the national debt, but you would take the bond market into devastation. So I don't think that's going to happen. But to pause or, not crank them as high, maybe, 50 basis points, the market will read into that now and say, well, they're giving up. We're going to have a more or less hyperinflationary depression.
Mm-hmm.
I mean, it's going to get to the point where people start spending their money for goods that they want to keep or preserve to keep their purchasing power. And the stock market in that case usually goes higher and higher. But like in Zimbabwe or Argentina or Turkey or any of these places that hyperinflate, just because the stock market's going up, people are better off in the market than they are in cash, right, but they're not keeping up with the true inflation rate. And the only thing during the Weimar Republic that actually beat the inflation rate was precious metals. And I think that'd be the case again here. So if we were to have another, let's say, big crank up in interest rates, maybe taking the metals down because the stock market says, oh my goodness, I'm not so convinced that this time would be the same thing. Meaning, I've always said, if we had a big crash in the stock market, the miners would go with it, and gold and silver usually sell off as well. But the market looks ahead. So it could, I wouldn't say would, could be different this time, meaning you might get a slight blip down in the miners and gold and silver. I mean, just like, something, let's just say, for example, we're at 20 something now and it gets up to 21. And then there's this huge crash in the stock market. So silver goes all the way down to 1980. Well, that's above the 1814 that Jim just told us about. And then it starts off again. That's more what I'm looking for.
If the Fed is planning this pivot, because there's only so much they can do, they can only take interest rates so high without blowing everything up. Is this the time where people should be piling into gold or silver? I mean, the gold to silver ratio is what, over 90 right now. It's not really me, hey, we'll go silver. But is now the time to look at the mining stocks and silver again, or is this still too early? You got to wait for the Fed to, they're probably going to raise rates again in September, 25, 50 basis points. But then after that, is there really that much more that they can, I got to think that's got to be near the end.
Well, it is. And I'm sure if you plot it out on a graph and look at it from, a monthly chart basis or a yearly chart basis, you won't even notice it. So if they go, 50 basis points or 75 or even a full point, it may upset the markets for days or a few weeks. But I think that gold and silver will shrug it off, like I just said. And yes, Jim, I mean, people like me that are in the sound money camp or honest money or, an alternative to government currencies or however you want to frame it. The time has come. And what's interesting to me being in market 16 years old is, there's going to be a lot of people that love silver at 30. But now that we're doing this, show at 20, they're going to wait. Oh, it's going lower. It's going lower. And even if it does go lower, they won't do it. And the best way is to gain discipline is just do a dollar cost average or make a purchase and just forget about it. The problem is most people become experts in the sound money fiat system literally overnight because it's not that hard to understand once you get that light bulb, once you get, that aha moment. Oh my God, they can just print themselves into oblivion. And that's the direction we're going. I need I do my own gold or silver standard and it makes sense. But most people go whole hog, put in too much, buy the wrong kind, don't think about it. And then all of a sudden they've got all this, silver and they say, wait a minute, it's going down in fiat terms. So take a good, take an amount that you're comfortable with to start. But yeah, Jim, what's going to happen in Ivan is that the run to gold, I think, has already started, but it's a walk. It's no one's noticing them. When someone walks by your house, whatever, I'm gonna look at them, but you don't notice. But if someone's in a full-edged sprint and there's a bunch of people following that sprinter like crazy, your eyes will get wide open. They say, wait a minute, what's going on here? And that's the kind of acceleration I expect to see in the next couple of years.
Well, did you saw that report of from Miles Franklin that someone bought $50 million, a billionaire bought $50 million recently. And we had Andy Schechtman on about a week or so ago. And it turned out to be a combination of gold and silver. Right. Was the purchase. The billionaire, supposedly a woman from Texas, wanted as much in silver American Eagles as she could get, and that ended up being around 900,000, and then the balance in pre-1933 gold, right, is what she actually ended up buying. And she said, and supposedly it's the first of many orders that she's going to be making, and she wanted it to be public to let people know that big money's coming into the sector. What's your initial take on that? That was huge news a week or two ago.
Well, a few comments, Ivan and Jim. Number one is I actually did a Bill Holter interview. I just put it on my Twitter feed about an hour ago. So
Oh, nice.
on Twitter, you can listen to it. It's audio only. Bill wasn't in the mood to be filmed, and I didn't have my hair done. So it's audio only. But we looked at it quite extensively in our premium service, but it's nothing, there's no key insights into that you wouldn't get basically in the public. But I did the math, and if, theoretically, she wanted to put in 1 billion ounces in the silver market. As I asked Bill, where would she go? I mean, there's so many sovereign coins. She could buy up all the Maples, all the Philharmonics, all the Kookaburras, all the South African silver Krugs, and still have tons of money left over. So I looked at it at a commercial bar, and if she did, the full 1 billion, that'd be 40 million ounces at $25 silver.
Mm-hmm.
And the exchange only has roughly, I think it's 53 million ounces in the registered category.
Mm-hmm.
And if you went into the COMEX to do it over time and just started pulling out, make up a number of 7 million ounces at a time kind of thing, what would happen? And of course, I've given this lecture many times that the probably would get the silver for a while. And then at some point, you probably get a phone call or a visit or both about what are you doing and why. And they put some pressure on it because they could force cash settlement.
Right.
Once they force cash settlement, it's sort of like game off in that scenario, at least the way I see it, because if you're cash on the barrelhead, in fact, and saying you want the product that they're supposed to have, then and you can't deliver or refuse to deliver. So, but no one wants to be that person. I mean, Jeffrey Christian brought this up to me years ago. I said, theoretically, a billionaire could come in and wipe out the COMEX, and it's true. I said, no one would do it. And I said, why not? He says, no one wants to basically do what the Hunts did, have to go above in front of a congressional committee, get sworn in and tell the powers that be why you like silver. Which, of course, was ridiculous, but that's what happened.
Yeah,
when
that's
you go
crazy.
on the other side and someone shorts the market, buys silver that doesn't exist and puts it in a vault that doesn't exist, all they get is a hand slap, and they still can trade silver. Remember when the Hunts did their thing, and I would argue legally, they were basically banned from ever buying silver in the futures market again for the rest of their lives. But when you're on the short side and you do something unscrupulous, you get a fine and you continue doing it. I mean, the game is rigged.
I was thinking through this. If you're a billionaire and you wanted to avoid the problems that the Hunts were having, and most billionaires are sophisticated enough to figure this out, they would set up a trading company and just go buy direct from the miners. Go buy direct from the refineries and the miners, and not be public about it by playing around in the futures market. Intercept the bars before they get to LBMA, intercept the bars before they get to COMEX. You probably get it cheaper. I mean, if you're buying in bulk direct from the miners, you're probably saving 50 cents to $1 per 1,000 ounces anyways.
Yeah, and let me add on to that, Jim, and that's an excellent idea. It'd be a little hard to pull off. You'd have to kind of know who to talk to, but it could be done, and it's a great idea. And the other one is just to go to the next subsets. So let's say somebody like Monex that's been in business forever, and you set up an account with Monex, and they'll sell you probably 10 million ounces on paper, no problemo. They have that on their books all the time, but no one has the cash to pay for delivery. But she would. So you put Monex in the hot seat because they've got to make good on the contract. They're not a futures contract. So you could do subsets like that, get to the big, the Andy Schechtman types that have big, Dylan Gage. I mean, I could name a few more, and maybe go to one of the warehouses on the exchange, like Coins and things, and say, look, I want to, you've got this many in the eligible category. Any of your clients want to sell to me at let's take 10 cents over, 20 cents over spot, which is nothing, right? It's already stored there, so there's a lot of ways to skin a cat, as the old adage goes. And I've thought about
without being public about it.
Without being public, totally
avoid the political danger of what the hunts were doing it on margin. I mean, if someone were truly a multi-billionaire in let's say the 15 to 20 billion dollar category, and they wanted to get 2 or 3 billion into precious metals, it'd be easy to do without leverage and to avoid the political risk like the hunts did. You just got to be a little bit smart about, using some of the ideas you just exerted.
I mean, you could go to Zurich Continental Bank. I mean, I met Eric. I don't know if he's still in charge or not. That guy was scary. He thought just like me. That worried me. But I mean, they're big silver bulls. So you could set up a couple of accounts like you just said. I want to pound this into the ground, but I think it's a very important point. There's a way to do it without ever having to worry about seeing, your Congress critter and having to, them trying to embarrass you for spending your money the way you see fit.
Well, hopefully some multi-billionaire is watching this video on YouTube and they're inspired to make it happen. And on that note, Mr. Morgan, thank you very much for joining us. I know you're in a hurry because you're taking off for your place in Montana, but thanks for making the time to join us before you go on vacation.
Oh, my pleasure. Best to everyone. And $20 silvers and above. Let's go.
Next stop 25, right?
Yeah.